Hello, everybody, and welcome to our 3D market commentary. Today is January 23, 2023. This is Monday. The week is starting, isn't it? US markets will be opening in 1 hour time, and it's a great way to start our planning for the week ahead. My name is Jose Blasco. I will be taking care of the session, and we should run for 10 to 15 minutes. We're going to do this quickly and efficiently. Before we do our market commentary, I would like to highlight the financial disclaimers on the upper left side of the screen. Please read it at your own pace. It's being highlighted. It is important information, and therefore I'm counting you all to read it completely, as again, it's important to know the risks attached to trading the financial markets. With all of this said, I'm just going to get rid of the introduction slide so we can jump into the charts. And I'm going to go over 5 markets. As you can see here, I got 5 charts. Of course, I'm going to maximize each of them, so we will see that with more detail. But before we get started with the charts themselves, I would like to point at the content, which I'm going to go over there, which is also available in a written format thanks to our newsletter. So I would like to show you how you can get the newsletter for yourself. Okay, so here you can see that information on the screen. Very simple. You just go to that link, tradewithyourforex.com/3D newsletter. And then you just click on the button subscribe. So what is it that we do? Well, it's a short, straight to the point analysis of the market to help us to stay focused and to make decisions as the week begins. We look at 3 key areas or 3 key elements that have to do with how markets work, how markets move, speed of movement, turning points, market direction, all of this. I'll be looking at this carefully, one market at a time. I'm going to be analyzing 5 markets: the S&P, crude oil, gold, the US dollar, and the backed Bitcoin as well. Notice the 3Ds are here: the climate, the UFOs, and the expected moves. You have that in the newsletter. Just in case you cannot attend the sessions live, those newsletters are also delivered to your email inbox. So I guess that's convenient if you ever miss the live streams as we are running right now. Now, having said that, let's go back to the charts and let's begin our analysis with the first market, which is the S&P 500 futures. So when it comes to the S&P 500 futures, we can see that we are dealing with an up climate. This is candle number 1 out of what statistics would suggest 8.46 candles on the way up to be a normal thing to happen. So the expectation for this market would be to continue moving higher. It seems that the S&P futures will open 0.23% up. Not surprising in an up climate. We may need some sort of a pullback before the move continues, but statistically speaking, we are supposed to be in that up climate for a few more candles. Now, knowing that is very important, but even more important would be knowing where the next turning point may be, which is 42.58. So if we get to where the red UFO is, UFO stands for on-field orders to sell in this case. So those sell on-field orders may kick in, and that would generate a turning point at that price. So very important point to keep in mind. Same if the S&P was to fall all the way to 34.80, the buy on-field orders, the buy UFO is there, and we would expect the S&P to turn up. So again, this information is available on the newsletter with the buy zone, the buy zone here and the sell zone above. And the market climate, as we said, is up climate at this moment in time. Now, from an expected move point of view, we are talking about speed of movement in a daily, weekly, and monthly time frame, and that is either up or down at a rate of 49 points a day, or at a rate of almost 110 points a week, or 228 points per month. That's the expected speed of movement, expected volatility. We get that from the options markets. This is extracted from the implied volatility of the options on the S&P futures. Changing topic now, we are going to move to crude oil. And when looking at crude oil, let me go back to the real-time charts. So with crude oil, let me come back here. Here we go. So crude oil, I have it here in the bottom part, maximizing crude oil. So what do we have? So with crude oil, we also have an up climate. Okay, it's also an up climate. Oh, sorry for that. This is not what I meant to do. So here's crude oil. We have an up climate. We've been in this climate for 7 candles now. Statistics suggest that 6.69 is a normal thing to happen. In other words, we are probably ending the statistical duration of this climate, and we are likely going to see crude oil to go down. Now, of course, before this happen, we may need to hit 8406, which is where the on-field orders UFO is. And for that, you would want to see crude oil just rally a bit more, maybe one more day, 2 more days, 3 more days, and then from there, the expected move to the downside would take place. If it gets to 79.16 or 76.74, we have 2 green UFOs there that would likely create a turning point in the opposite direction. So this is what is expected from crude oil. Going back to the newsletter, you have the buy and sell zones here. The climate is up, but caution because it's been lasting for a long time, and the expected moves daily, weekly, and monthly would be 1.94 points, either up or down in a day, 4.27 points, either up or down in a week, 8.88 points, either up or down in a month. Next market, it's gold futures, and I am moving now into gold. And as we are moving into gold, so we can see a very exaggerated climate here, which is blue going up. That climate has been running for 17 candles non-stop. Statistics suggest that 584, I'm running up to 6 is a normal thing to happen. Well, this almost triples what statistics suggest. So again, statistics are an incredible, and thank God we got stats, they're an incredible tool to be objective with your analysis, but obviously statistics are broken from time to time, less often than not, because that's why there are stats. But at the same time, even when you got 99% probability of something to happen, you still got 1% probability of the opposite to happen. So this is a clear case of that, where gold is just showing what statistically would be seen as a market situation where it's likely going to be inconsistent, based on unsustainable, I mean to say, not inconsistent, it's been very consistent, unsustainable from a statistical point of view. But of course, statistics are just numbers. The key now is that notice how we have hit that red UFO. And since we hit the red UFO on the prior trading day, gold has started now to be hesitant to continue going higher. And why is that? Well, because the sell-on field orders are kicking in at that price, and the buy orders are lower. Okay, so the expectation would be for gold to drop all the way to 1871, and from there, probably we'll see gold to go back higher. At this moment in time, while we are in an up climate, uptrend, and up everything, careful, because of we got those sell-on field orders located at 2003, 1962.7. Okay. Expected moves, speed of movement expected to be at a rate of 19.96 points a day, either up or down. Let's call it 44 points a week, either up or down, and 91.48 points a month, either up or down. Next market, extremely relevant market, the US dollar. Let's go ahead and take a look at the US dollar right here. So the US dollar is in a down climate. We can see the red dots there, isn't it? Okay, so red dots going down, okay, down climate. It's been going down 11 candles out of what statistics would have suggested 5 point something to be a normal thing to happen. So we have another case which is quite rare, and by the way, those rare cases go in tandem because the price of gold is priced in US dollars. Given the fact that the dollar has been dropping more than what statistics would have suggested, well, then the price of gold is rallying more than what statistics would have suggested because gold is priced in US dollars. This is the beauty of understanding the market, isn't it? Now, having said that, there is still a little bit of room until we get to 167. So I could certainly see dollar to drop a bit more to 100 before it turns around. And when it gets to 102.77, well, again, sell-on field orders are present. So careful there. Okay, careful there for the ones who are betting on moves to the upside on the US dollar. Expected speed of movement, 0.55 points a day, either up or down, 1.21 points a week, either up or down, 2.52 points a month, either up or down. Next market for us to assess is the backed Bitcoin. So let's do that. Backed Bitcoin. I have it here. So let's maximize this, our friend. Here we go. So Bitcoin is in a very strong market condition going up. Now, this is a relatively new market, therefore, we have no stats on what's normal and not normal. And I mean, we could run stats, but again, the sample data, it's a fairly new market, and therefore the sample data will be limited, and therefore statistics would be probably not that relevant. Okay, so in this case, I'm going to limit myself to say that we are in an up climate. It's been running for 13 candles. It's been a long time we haven't seen that kind of climate. The last time we saw something like that was back here in April last year. So that's indeed relevant. And not only that's relevant, on top of that, you can see how new on-field orders are being added to this market. Sell on-field orders are also present, but just a little higher. Okay, so probably what we're gonna see is we're gonna see Bitcoin to react to these sell on-field orders, drop to where the green is, and from there see it go back higher. Okay, that's, I would say, what's probable based on the analysis I am performing for you guys. With all of that, speed of movement 922 points a day, either up or down, 2,000 plus points a week, either up or down, 4,200 plus points a month, either up or down, which again, that's extracted from options. In all cases, the 5 markets I have presented for you guys, all of this is extracted from options prices, okay? Economic calendar, I'm very quick before we get into economic calendar. Our company, if you're new to us, we base everything we do in 3 pillars: the apps, which is the trading technology that I'm using, which is the bread and butter of any modern trader, trading without technology in the world of AI. It definitely puts you at a major disadvantage, I would say. No chance these days. So using trading technology that is intelligent is absolutely key. So you can take a look at our website, and you saw me use the UFOs. We have a patent on that. Again, we are quite proud of our tools. Then, of course, we have the courses. Why? Because you may not need them, but for the ones of you that need to be trained on how trading works or need to be trained on how the apps work, you can certainly take our courses. They are extremely easy to get, very, very affordable, so you can get trained. Our main interest for you guys is to know how to use the tools, because we may have the best apps in the world, but if we don't teach you how to use them, then you will be limited. Okay, so that's why the courses are in the affordable side for you guys to register easily. And then the coaching, which is when we meet online to trade together, so we can help you to develop your knowledge and transform it into a skill while you're using the technologies. Okay, so keep that in mind. This is our philosophies. And then the economic calendar, where, of course, if you're in Asia like I am, you may hear firecrackers, which I hear from my office on the street. Lots of celebrations out there. Being a trader, like in the movie Wall Street, money never sleeps, pal. So here I am. But lots of celebrations in Asia. So low liquidity, low volumes in most markets and so on. I guess that is something that most of you listener probably are aware of. But just in case, happy Chinese New Year. And apart from that, certainly there are other reports that are going to happen during the week, as you can see highlighted here on the screen. Maybe I could zoom in a bit more, and that would help as well. But basically, until we get to Thursday, where we have durable goods and the GDP, but even those numbers, which are critical, is not like they're going to create, or they are supposed to create, these amazing peaks of volatility. Okay, so I would say a little bit of a quiet week when it comes to economic reports. And finally, in case you like to read, and probably you know that already, but just in case, we have this book that we are super proud of as well. We got designated #1 new release in 3 categories in Amazon. And you can certainly acquire the book. And by the way, as a highlight, when you get the book, you also get 3 months of UFOs for free, and you can get the book for as low as $3.88. If you get it in ebook format, you also have the paperback version if you prefer to read it in paper. Okay. With all of this said, my friends, I believe that is all for today, and I thank you very much for joining me in this market commentary. I'm pretty sure you hear the fireworks on the screen right now. Maybe a good way to say bye-bye. But anyway, thank you for joining me, my friends. Have a great trading week ahead. We will be around. If you need anything, shoot an email to our support team. Contact us on the question page. Again, anything you need, we are around. So you take care, trade well, see you soon, manage your risk. Bye-bye.